A stock went from a brand new all-time high to down 6% in a single session. Today we look at what the chart was telling us and what comes next after global market recap. Here is your overnight recap for June 17th, 2026. In Asia, the Nikkei edged up 0.13% to 69,404. The Hang Seng fell 1.4% to 24,493. Shanghai dipped 0.11% to 4,091. In Europe, the DAX was nearly flat at 24,910. The CAC 40 gained 0.75% to 8,447. The FTSE 100 rose 0.61% to 10,494. In the United States, it was a rotation day. The Dow Jones gained 0.64% to 51,999, a new all-time high. But the Nasdaq fell 1.15% to 26,376. The S&P 500 lost 0.57% to 7,511. And Micron Technology, closed at $1,020.76, down 6.18%. It is trending up in after hours. Three things moved markets yesterday. The first was the chip sector. The Philadelphia Semiconductor Index fell 5.7%, the biggest single-day drop in weeks. Money rotated out of technology, which fell 2.3% as a sector, and into financials, which gained 1.5%. The Dow hit a new all-time high precisely because of this rotation. It has less tech, more banks and industrials. The second big story today is Kevin Warsh's first Federal Open Market Committee press conference as the new Federal Reserve Chair. Rates were held unchanged at 3.50 to 3.75%, the fourth straight hold. The real story is the dot plot, the Fed's projection for where rates go from here, and Warsh's tone. We will cover the outcome in tomorrow's update. And third, SpaceX. SPCX closed at $201.80 yesterday, up 4.83%. After briefly overtaking Amazon and Microsoft in market cap during the session, it is now the fifth most valuable company in the United States, trending up in after hours. Today's chart of the day is Micron Technology, and the chart tells a very clear story. On June 16th, Micron opened at $1,099.72. It pushed up to an intraday high of $1,110.40, right up against the resistance level annotated on the chart at $1,112. Then it reversed. Hard, it closed at $1,020.76, a $90 intraday reversal, on elevated volume of almost 29 million shares. That resistance level held perfectly. When a stock hits a labeled resistance zone and reverses on high volume, that is the chart working exactly as intended. The key support levels to watch now. The first support zone at $923, which lines up closely with the 20-day EMA at $921.60. Below that, the second support at $813. All the major moving averages, the 50-day, 150-day, and 200-day, are still rising, meaning the long-term uptrend is structurally intact. Now here is what I want you to pay attention to on the indicator chart. The RS is at 60.48. That is mid-range, and that is actually important, because this is not the same situation as MRVL before it crashed, or Dell, or AVGO. In those cases, RSI was above 80. Here it is, 60. The sell the news risk still exists going into earnings, but the indicator is not in the danger zone. The MACD is showing a bearish crossover forming, which is worth watching and monitoring for further development. Three takeaways. 1. The resistance at 1,112 held perfectly. This is what chart levels are for. 2. RSI at 60 is not a sell signal. Context matters. It is not the same as MRVL at 85. 3. Earnings are 7 days away on June 24th. Options are pricing a 17.6% swing. DCA if you want exposure. Do not chase after a 6% drop. Wait for the chart to stabilize at first support. That is your Global Market Pulse Daily for June 17, 2026. Subscribe for tomorrow's update, posted every morning at 7 a.m. Eastern. Reminder, no markets on Thursday for Juneteenth. Happy trading.